On the screen now you should see a reminder from our friends in the legal department. Please remember that the information we present today does not constitute financial, tax, or legal advice. This is educational information that may help you better understand situations faced by many active traders and investors. But remember, you're responsible for the decisions you make when it comes to your investments and your taxes. So as I mentioned, my name is Melina Triplett. Our presentation today will be focusing on how the 1099-B problem affects you. Last week, Armin Computing, the makers of TradeLog software, published a special report entitled The 1099-B Problem: Why IRS Regulations Have Failed to Meet Cost-Basis Reporting Needs. Joining me today is Jason Derbyshire, the key author of this special report. Over the last 5 years, Jason has been following closely the developments of cost-basis reporting legislation, as well as dealing firsthand with the new 1099-B reporting. Jason, welcome, and thank you for joining us.
Thank you, Melina, and hello to everyone this afternoon. It's great to be here with such a large group, and we look forward to our discussion today.
We have some questions that we've prepared, as well as some examples and key points from the special report. I will mention to our audience that you are welcome to submit your questions and comments. Likely we may not have much time to answer your questions today, but we may be able to reply to your questions later via chat. And we will have a few opportunities to get feedback from our audience. Right now, we just put up a brief poll here. What do you think of 1099-B reporting? It's caused more problems for tax reporting, it's made tax reporting easier, or maybe you're undecided. So while everyone is responding, Jason, what do you think about this question?
Well, let me say this. When cost-basis legislation was first passed back in 2008, I thought that it could really change tax reporting for traders and investors because in theory, and at first glance, it seemed like a great idea. Brokers would essentially provide a 1099-B that would have all the information needed for tax purposes. But I think now the general consensus with most people I've spoken with is that the reality is the 1099-B has a lot of problems. It's not really made things easier, especially not for active traders.
Well, let's see what our audience says.
Yep, and look at that. I mean, nobody, come on, nobody thought that tax reporting is easier. But, and this is what we see. Everyone we talk to, whether it be traders, whether it be brokers, lawyers, they all see problems that are happening in the 1099-B as it is right now.
Okay, so Jason, maybe you can give us a little bit more background. What is the 1099-B problem?
Well, we can start again by going back to 2008. That's when Congress passed cost-basis reporting legislation. Now, the federal government always has a tax gap. That's the difference between taxes that should be paid and what is actually paid. And what they had found, we use numbers here that they reported from 2001, which is what Congress especially looked at. In 2001, about $17 billion of the tax gap was attributed to traders in securities, ones who misreported capital gains. They estimated that there were about 7 million traders in 2001 who did not report capital gains correctly, whether that be intentionally or unintentionally. Mm-hmm. Now, prior to the legislation, brokers were only required to report sales proceeds on the 1099-B. The cost basis part was the responsibility of the taxpayer. So it made sense that if the 1099-B reported both sales and cost basis, that would make a difference. And so that was in general the solution that was passed in the legislation. For the taxpayer, they would have everything they need in theory to determine their gains and losses. For the IRS, they also would have all the information which they could use to hold taxpayers accountable for reporting accurately. Now again, up to here, everything sounds great. And for years, here at TradeLog, we had reiterated the fact that the 1099-B was only telling half the story when it just had sales proceeds. We saw many traders struggle trying to find cost basis information for taxes, and we'd be baffled when we'd hear from people that their broker said we don't have the cost basis, because it seems like a no-brainer. The broker should be able to provide cost basis information.
Right.
But by the time 2011 came, and that's the first tax year where the new 1099-B became effective, it was obvious then that there were some really serious issues. Many who are here with us today can probably attest to the fact that brokers really struggled. There were many challenges for brokers to even provide a 1099-B on time. Sometimes they didn't get it out till weeks or even months after the February 15th deadline. When the reports did come out, they often had errors. There were inconsistencies in formatting, what was reported, how things were adjusted. But beyond the broker challenge, there were other issues that we began to see. Issues with the 1099-B, with the regulations, the whole purpose. And we saw that the 1099-B really was failing. A couple things we highlight: there are different rules for what brokers report on the 1099-B and what taxpayers have to report on their tax return. And then there are serious flaws in the whole concept and the design of the reporting system using 1099-B and what's now the new Form 8949. So to sum up, what is the 1099-B problem? Well, the problem is that the 1099-B does not really provide what traders, investors really need in order to accurately file their taxes.
So now it's 2013. We've passed 2 years of the new 1099-B reporting. So why are you now publishing this special report?
Well, after the first round of reporting came for 2011, there were so many problems that we thought surely the IRS is going to see this and understand that it's not quite working right. So we were anxious to see what 2012 would hold, what changes there would maybe be. And there were some improvements in 2012. Many brokers were able to iron out a lot of their problems. We saw reports come out much more quickly. And the IRS even tweaked some of their requirements to make the 1099-B format a little more consistent, things like that. But the core problems, the underlying issues, were not addressed. In talking with various parties, it seems that some involved sort of feel like, well, it is what it is. We just have to make the best of it. We also found some groups really didn't understand the problem. Have talked with traders, CPAs, legislators. Many we've talked to never really looked below the surface of the 1099-B. So they think that, well, the broker's providing it, just use it for your taxes. What's wrong with that? So that's why we published a special report, because we're trying to show that there are real serious problems, underlying issues with the 1099-B that do have to be fixed.
Okay, well, let's go through some highlights of the report and have you share some insights.
Okay.
The first section deals with differing rules for taxpayers and brokerage firms. Tell us, why are differing reporting rules such a problem?
Well, the IRS outlines rules for brokers as to what's going to be reported on 1099-B and how to report. And of course, the IRS also has rules for taxpayers and how they report their capital gains. The problem is those rules are very different. So in the special report, we highlight three things in particular where these rules are different. Number one is that there are differences in what is reported. For example, brokers currently do not have to report cost basis for all the securities that you trade in your account. Of course, as a taxpayer, you do have to report all your securities. There's major differences in wash sale reporting. That's very significant, so I'll come back to that more in a moment. There's also differences in special rules, like the constructive sale rule, which especially affects short sales and can really have a difference when you have short sales closed at the end of the year. Brokers do not have to adjust for some of these special rules. Taxpayers do. Now, as I mentioned, the most significant difference of these is with wash sale rules. Now, early on, the IRS realized that brokers cannot possibly account for all wash sales because they don't have the full picture of a trader's situation. Maybe he has other accounts with other brokerage firms. There are certain things that could affect one trader that may not affect another. There's also questions about wash sales that have never been fully clarified by the IRS. Particularly, I know when you get into the subject of wash sales and options, there's a lot of things that are vague and left up to interpretation. So what the IRS required of brokers is to only adjust for wash sales on securities that have the identical CUSIP and are traded in the same account. And we show that here on the screen from the rules for 1099-B, which is from the instructions for 2012. Now, if you look at taxpayer requirements in publication 550, you'll see that wash sale rule requirements are much more extensive for taxpayers than they are for what's being reported on the 1099-B. In fact, in the special report, we list 7 situations that a trader may have that would make 1099-B wash sale reporting incomplete. Basically, we can narrow it down even more if a trader has more than one trading account, if they have an IRA account, or if they trade options. Those are, I think, the 3 biggest situations. In those situations, the 1099-B must be viewed as possibly incomplete.
So I think this is a great time now to ask our next poll question. And in this case here, you can make more than one selection. So if you are a trader or investor, which situations apply to you? I have only one taxable account and no IRA account. I have more than one taxable account. I have an IRA account, or I trade option contracts. So we have a lot of traders with us today, so let's get a feel for how this affects them. And while we're waiting for the results, Jason, what happens when options are reported on the 1099-B?
That's a really good question. Originally that was supposed to start in 2013, but brokers now are not going to be required until 2014 tax year to start keeping track of cost basis on options. From what we can tell right now, it seems that the same rule is going to apply. They'll only have to adjust wash sales on identical CUSIPs, which in the case of options, often if the strike price for an option contract is different, then it's going to be treated as a different CUSIP. Now, we can have an entire separate discussion about wash sales on options. The bottom line is it seems that anyone who trades options with the current 1099-B rules, you likely will never have a complete listing of all your wash sales on the 1099-B.
So here are the results of our poll.
Well, wow, it's actually more than I thought, but I mean, you look at this, 3% of the traders who are with us today say they only have one taxable account, no IRA. But these others, we're running about 80% either have more than one account or have an IRA account or trade options. So we can safely say then, about 80% of the traders who are with us today cannot rely on the 1099-B alone. That means that they're going to have to scrutinize it because there's a good chance that there are additional wash sales that the broker was not required to report.
So Jason, for those traders who have more than one account or who trade options, does that mean the broker messed up the 1099-B?
Well, not necessarily. Again, the broker simply is not required to adjust for those other wash sales. Oftentimes, they can't. So the 1099-B that you get may have some wash sales, but there may be additional ones that have to be adjusted, and the responsibility for that is put on the taxpayer to do the extra work of identifying and adjusting those particular wash sales. I like the illustration that's often used by Robert Greene, who is a CPA with Green Trader Tax. He's published a lot about trader tax topics and especially about the 1099-B problem. Bob often uses the apples and oranges comparison, and I'm going to take that a bit further here to illustrate the problem. Brokers are required to report on 1099-B, which they give to the IRS and the taxpayer. The rules for 1099-B essentially, we're going to say, result in an apple. Then you have taxpayer reporting. Form 8949 is now the main form used for reporting trading gains and losses. Publication 550 details the rules that involve capital gains. Those rules are different. So essentially, a taxpayer is required to generate an orange or provide an orange to the IRS. So we take this a step further with this little chart here. So the broker sends an apple to the IRS and an apple to the taxpayer. The taxpayer needs to send an orange to the IRS. So the apple that the taxpayer gets, the 1099, is pretty much useless unless they can do a magic trick and turn their apples to oranges. To make matters even worse, though, the IRS is getting an orange from the taxpayer and is going to compare that to an apple they got from the broker. Is that a problem? Yeah. Yes, it's a serious problem because It doesn't work. It does not make reporting easier. And I think this really kind of helps us see visually there's a serious problem in this system.
Yeah, so I mean, I have to ask, if the IRS gets an apple from the broker, wouldn't it be easier for the taxpayer to send an apple to the IRS so that it matches?
Well, and that's a problem that we're seeing. Many traders and investors feel like they should just use the 1099-B as it is, send that information to the IRS. But it may not be accurate. Many are completely aware that there are different rules that apply to 1099-B and Form 8949. They haven't been educated about that. Some who do know about the differences would rather just ignore the problem because it means more work to generate the Form 8949. So traders have been given a choice. Do I want to file my taxes correctly? And honestly, doing so often means more effort. Or they can just use the 1099-B information and hope they never get audited. So we see from what's going on that the taxpayers who want to report taxes accurately, or those who are being audited and have to redo their reporting or have to go back and do it accurately, for those, the 1099-B is really making things worse. So this is the result of the IRS regulations. They've made a system that makes taxpayers who want to do things accurately and correctly do more work. And all of this contributes to another problem, which we're going to talk about, I think, later when we discuss Section 3 of the report.
And we'll get to that in a few minutes. Let's talk about Section 2 of the report, erroneous 1099-B reporting by brokerage firms. What problems have you seen in the 1099-B reports?
Well, as I mentioned earlier, the first year, 2011, we saw a lot more problems than we've seen in 2012. But there are still some errors and inconsistencies that are troubling. In the special report, we actually used some examples from the 2012 tax year reporting. One major problem that we first reported on in 2011, but is still present in 2012, has to do with how some brokers report wash sales on short sales. And basically what we found is that some brokers, when there's a short sale that has a wash sale adjustment, what they do is adjust the sale proceeds instead of adjusting the cost basis, which, as you see from the IRS regulations we have on screen, you're supposed to adjust the basis of the security, not the sale proceeds.
But in those cases, isn't the end result the same whether you increase the basis or decrease the sale proceeds?
It's true. The calculation, you're going to get the same gain or loss using either method. But the problem is when they start using a different method, and again, we're talking some brokers using a different method, that means you start to change the sale proceeds. And so this makes it very difficult for a taxpayer who's trying to reconcile this 1099-B. And of course, the bottom line is it's not correct. The regulations say you adjust the cost basis. You don't adjust the sale proceeds. It's never been in the regulations. In fact, it's interesting, some of the brokers who used this incorrect method in 2011 changed for 2012. They changed their method to correct it for 2012. Yeah. But we're still seeing that there's some brokers doing it incorrectly. One happens to be one of the largest brokers out there. But there's other problems too that we found. For example, we found some inconsistencies in how brokers interpret what securities should be reported on the 1099-B and which should not. And this is because some of the rules are left to interpretation. So one broker is going to interpret different than another. We also found some anomalies, reporting that really can't be explained when you're looking at the 1099 in detail.
Now, in those cases where something is unexplainable, couldn't the taxpayer simply call the broker and ask them to explain or correct it?
Yeah. I mean, you can, certainly. And sometimes the broker is able to explain what they did, and they may be correct in the way they adjusted something. But here's the point, and here's why this is a problem. If a taxpayer gets a 1099-B, they need to know, can they trust this? Is it accurate? Now, the 1099-B usually includes a disclaimer reminding the taxpayer they are ultimately responsible for their tax reporting. So what that means is ideally a taxpayer should go through and verify or reconcile the 1099-B. So if we have anomalies that require them to do extra research, to call the broker, well, we just increase tax reporting burden. if there's inconsistencies between different brokers, if there's errors in methods that are used. All of this makes it more difficult, sometimes even impossible, to try to verify what's on the 1099-B. And so what we're talking about then is increasing tax burden. And this ties in again with some of the flaws that we're going to mention in Section 3 of the report, but ultimately our focus is with these types of errors in reporting, it increases the burden on the taxpayer.
Before we talk about Section 3, let me ask you, where do brokers fit in here? Are they to blame for this problem?
Well, brokers have been put into a tough situation. We agree brokers should be required to provide both sale proceeds and cost basis information. That, again, should be a no-brainer. But we think the IRS went too far when they required the brokers to make adjustments, particularly adjustments for wash sales, but they also have some other adjustments that they have to make, like with corporate actions. We didn't even touch that in this report. When you ask a broker to report adjusted cost basis, to make wash sale adjustments and such, you're really asking them to provide tax accounting. Many brokers I've spoken with agree that they really should not be put in the position where they're providing tax accounting for their clients, because there are factors that they don't know, and that's just not their responsibility. So
Right.
brokers often struggle with this. There's aspects of the rule, as I mentioned, the rules that are vague, that are left to interpretation. So now the client is expecting a 1099-B that gives them everything. They think, well, the broker's going to give me everything I need. But the reality is brokers simply can't do that, nor should they be asked to. I think it's safe to say that brokers have probably spent across the industry millions of dollars implementing and supporting the new 1099-B. And so it's got to be frustrating for them to be put in this position to spend all this money on reporting that in many cases, and as we saw from the majority of our attendees here today, it's useless, it's worthless. So we hope the brokerage industry will support our efforts to highlight the 1099-B problem and to get the needed changes.
Okay, well, now let's go to Section 3 of that report. Flaws and challenges in reporting requirements. This section has some pretty significant points you make.
Yes, we really kind of bring everything together when it comes to Section 3 of this report, because some of the problems that we talked about earlier, they all really culminate in what we think is the most significant flaws, which are in the system itself, what's been put in place with the 1099-B.
So in this section you basically state that the 1099-B is bad accounting. Why is that so?
Well, we looked at the 1099-B from an accounting perspective. And what we looked at in particular is that one of the core principles in accounting is that information reported should be verifiable and objective. What does that mean? Well, to be verifiable is quite simply just that. You should be able to verify the information that is reported. So, for example, if I receive a 1099-B, either myself or my accountant should be able to look at the cost basis and sale proceeds and verify those numbers with information I might have. But connected also with being verifiable is also being objective. An independent individual should be able to take the same information and produce a 1099-B following the same set of rules and get the same results. That's part of being objective. Again, getting results that can be verified independently. Now, almost every 1099-B we've seen does not provide sufficient information to show what exactly was adjusted and the amount of the adjustments. For that matter, many times brokers may group together trades. They're allowed to do that. They're allowed to group things together, and for the date acquired, they put various. But think about, how can you do that? How do you verify if the information is correct when you can't find exactly when you bought something?
Right.
That's the problem. And speaking too of dates, the wash sale rule can cause the holding period to change for trades. So brokers are usually reporting a date that could be completely different than the actual trade date when that security was acquired or purchased. But they don't list the actual trade date. So that's the problem here. I mean, their adjustment may be correct, but without actual trade information, you can't really verify this. As we discussed already too, there are different interpretations about wash sales, about what should be reported, and again, the 1099-B does not explain how the broker came to their adjustments and calculations. If you try to, in our report, we give some examples, and we ask, try to figure out where did the adjustment get made to? Has the cost basis that's been reported for a particular trade, was it adjusted? Was it not adjusted? You can't tell because there just isn't enough information.
Right, right. Well, let me ask though, if the taxpayer contacts the broker, will they provide that explanation and information?
Many brokers do. In fact, many actually have more detailed reporting that is available because, they knew that there's not enough on the 1099-B. People are going to ask. Now, sometimes it's difficult to find that detailed reporting and understand it. But here's the point. Why do you provide, why are they being asked to provide a report that fails to provide enough information, all the information that's needed by the taxpayer? Again, we go back to talking about reporting burden. The burden involved in verifying the 1099-B makes it more difficult than ever. So the bottom line, we feel from an accounting perspective, is that the 1099-B fails to meet core principles. In its current state, it's bad information mainly because it's lacking sufficient details. And like we say on this slide, if a CPA picks up a 1099-B and cannot independently verify every line, we believe the report's worthless. And we've talked to CPAs who've been in that very situation. They're looking at a 1099-B and they struggle for hours and they can't figure out what's being adjusted, why it's being reported that way. So that's a real problem.
So this goes right into what you write are flaws with the system of reporting. What is flawed?
Well, again, let's go back to cost basis legislation. Congress basically says, let's give traders the information they need to make it easier for them to report their taxes and make it easier for the IRS to verify what they report. That basically sums up the whole legislation that they passed. So let's consider now the system that we have in place from the IRS. First, the broker provides a 1099-B to the taxpayer. Now, mind you, with limited wash sale adjustments and for only some securities. Next, the taxpayer is expected to take the 1099-B information and use that to fill out Form 8949. Now, keep in mind, when we're talking active traders, we're often talking about thousands of trades. And the 1099-B itself is usually provided either in printed form or as a PDF. And so it's often very difficult. How would you take that information and copy that over to Form 8949? For many, it's done manually. Now, next, the taxpayer is going to have to fill in any non-reported securities. So, for example, currently, since option contracts are not reported as covered securities, they may not be on a statement from the broker. So the taxpayer is going to have to get that information and fill it in. There's also securities that are not covered for other reasons. So the taxpayer is going to have to find out any missing information that the broker may not have, and they're going to have to fill that all out. Finally, the taxpayer has to make additional adjustments that are required, as well as corrections. Keep in mind the IRS says that taxpayers should be maintaining their own records, which they can use to verify the 1099-B. But again, as we talked about, the 1099-B does not provide enough detail to verify it. So that part of the task may be impossible. Plus, there's additional adjustments, as we've talked about differences in wash sale rules. So the taxpayer may be responsible to make additional wash sale adjustments, but those may also completely change what the broker's reported. Again, that goes back to the fact that the 1099-B does not have enough detail to even understand what the broker's adjusted. So often making those additional wash sale adjustments can also be an impossible task. Besides that as well, the taxpayer often isn't told that they have more wash sales that are not reported on the 1099-B, so they may not even be aware of the fact that they need to make those additional adjustments. So right away in this system, we have a big flaw. How does this make it easier for the taxpayer? Because they're being asked to do what may be impossible tasks. And in fact, I think we're going to ask another poll right here, correct?
Yes. Here's the question for our audience. Have you been able to verify each line of your 1099-B? And the choices here are yes, no, or I didn't even try. Jason, while we're waiting for the results, do taxpayers really need to verify their 1099-B?
Yes, according to the IRS, they do, because you think about it this way: if your return is found to be incorrect, you cannot blame the broker. You can't say, "Oh, well, that's what my 1099-B said." That's not going to hold up to the IRS, because the instructions from the IRS state that the taxpayer is responsible to verify the information they're given and ultimately to make sure that they file an accurate return. It's the same that's true with any 1099 you get or any W-2 you receive. You as a taxpayer are supposed to view it as third-party information, and you're supposed to verify it and then make sure your return's correct.
So here are the results of our poll.
So yeah, so we see kind of a split here. 19% have been able to go through and verify. I'm sure that was not the easiest task, but look at that, 48% didn't even try. And I can agree with that, because I've seen some 1099-Bs and you don't even know where to start. Sometimes there's so many pages because, and I think I saw a couple comments posted on our Q&A board about this, where the broker split things up into so many tiny trades that you can't even tell what's going on. So this is really where we're dealing with a problem in the burden of reporting.
So how have traders been filing their taxes these last 2 years?
Some haven't. Seriously, we know of some traders who are still trying to file their 2011 taxes. But for those who have filed their taxes, usually what we see is one of two things. More and more are simply using the 1099-B. Some use it out as it is. In fact, 2 years ago, I heard a CPA erroneously say, well, just use the 1099-B instead of an 8949. Just send that in, put the totals in your Schedule D, don't mess with it. Big problem there. She forgot the point that the 1099-B didn't include all of the trades and all the information that's supposed to be reported. So that's the type of thing that we see out there. Two, some of the most popular tax software programs like TurboTax, sometimes these will say that you can import your 1099-B from your broker. Now, it's interesting, we've done some research on that claim because we haven't found a broker yet that actually provides the 1099-B in a downloadable format besides a PDF. What those programs like TurboTax are often using is a gain and loss report from the broker, which it should have all the information. But the problem with this is, again, there's a responsibility to verify the information, and there's usually additional adjustments that may be needed from what's reported on the 1099-B. So if you're using a program like that and you're just importing the data as is from the broker, it's the taxpayer who's going to have to go in and make manual adjustments. Now, I know like TurboTax and some of the other programs, they do allow you to do that. And if you read the fine print, they mention that you may have other adjustments, but most people don't do that. The other method for filing, which is the trade log method as well, is to actually generate separate reporting, usually using accurate trade history records. What a taxpayer can do, what a trader can do particularly, is take their actual trade history and use that to create the tax reporting required with all the wash sale rules and every other adjustment required by Publication 550. Now again, since the 1099-B does not provide all the details and all the information that's needed, this has to be done separately. So we're using trade history in order to do it. But using this method, the taxpayer can try to reconcile with their 1099-B. I say try because it's often difficult, sometimes impossible, for the reasons that we've mentioned. Now, mind you, this second method, it takes more effort often, and there's a risk. Because, again, the IRS is comparing that apples and oranges, so they're going to compare the 8949 and 1099-B. They may see a difference. They may actually flag it for review. But the good part of this is the taxpayer knows that if the IRS does review their return, if they do audit them, they're going to find that they reported correctly because the taxpayer used actual trade history and they used the IRS rules for taxpayers. They didn't rely on the messed up 1099-B. But again, looking at this situation, let's be real. If a taxpayer has a choice of filing incorrect taxes, which is easier to do, or filing correct taxes, which is more difficult, what do you think they're going to do? And that's why we say the system is flawed. Did I mention, by the way, the instructions for all of this are often misleading and very confusing. In Section 3 of the report, we actually give some examples that show the misleading and confusing instructions given by the IRS and other sources, and I'll warn you, it can make your head spin.
Right, right. In fact, in the report, you actually state that the IRS system could make tax evasion easier. How is that so?
Well, again, we come back to wash sales. We all hate wash sale rules because they can be real complicated, but the reality is we need wash sale rules because those rules prevent an unscrupulous character from cheating on their taxes. Wash sales are a technique that can be used to reduce taxable gains, so that's why we have wash sale rules, and we explain that in the report. But as we also explain in the report, the new 1099-B, because it's only reporting very limited wash sale adjustments, it doesn't make it necessarily easier for the IRS to catch the guys that are intentionally using wash sales to try to evade taxes. In fact, we've seen some examples where a trader could create wash sales. For example, they could sell something at a big loss in one account, and within a matter of seconds, they can buy that same security back for about the same price in another account. Technically, that's a wash sale, but it would never get reported on the 1099-B because it's in separate accounts. So in this case, the taxpayer, they could just file their taxes and report exactly what's on the 1099-B. Now, the IRS, the only way they're going to find that there was that they had evaded taxes using wash sales was if they do an audit. They review the account in detail. Now, again, what the trader did in that situation wouldn't be legal. We certainly don't condone it. In fact, that's why we're publishing this in this report, because we feel like the IRS has created a way that could actually allow some people to abuse the 1099 and evade some taxes. So the IRS is going to have to either make a change with the 1099-B, or they're going to have to be more vigilant in reviewing and auditing traders, particularly those who have multiple accounts. Now, as we established earlier today, at least 80% of those who are listening have more than one account, taxable account or an IRA account. So that means that for 80% of those listening, the IRS needs to heavily scrutinize your return. Now, this brings us back to reporting burden. Is the IRS prepared to review 80% of trader tax returns? That's not what the whole legislation was supposed to be about. They were supposed to make it easier to file accurate taxes so that they'd reduce these problems. And we certainly don't want the IRS auditing 80% of traders. We know they can't even do that. But the reality is here, we also don't like the fact that there are individuals out there who are able to get away with not paying their fair share of their taxes.
Right. Well, I guess that brings us to Section 4. Can this be fixed? What is needed to do cost-basis reporting correctly?
Well, the answer to can this be fixed? Yes, we believe this can be fixed. We believe it can be done right. And the 1099-B can be made into a useful report that actually provides cost-basis information that's needed. We could do a little bit of history here. Since 1999, TradeLog software has been generating trader tax reporting. As I mentioned, the method we used, what we realized from the very start, is that in order to get accurate tax reporting, you have to go back to the actual trade history information. So that is what TradeLog strives to do, use actual trade history, not rely on the 1099-B or on any adjusted information. So we kind of use the principle garbage in, garbage out. We've all heard that. Well, if you take a 1099-B that is not verifiable, not objective, incomplete, sometimes erroneous, and you use that to fill out a tax return, your tax return is going to be unverifiable, unobjective, incomplete, and error-prone. What's the main problem here? Well, the main problem is what is reported on the 1099-B. The regulations that dictate what the 1099-B reports and how it reports, that is the problem. So we took what we know from our experience and said, well, what should the 1099-B look like? And in our report, we make 13 recommendations to get the 1099-B corrected, to make it something that's actually useful. Now, what our recommended changes would essentially mean is that the trader gets a 1099-B that reports all of their trading activity for a tax year, but it reports facts, actual trade history. Because again, the problem that came in all of this with the 1099-B is when brokers were asked to make wash sale adjustments. That's where they're starting to do tax adjustments. And again, there's different rules, there's inconsistencies, there's various interpretations. So that's what really took this and threw it all in the trash. So if the 1099-B contains just actual trade history for all trades, now we have something that can be used because the taxpayer can look at that. They have everything they need: the original sale proceeds, the cost basis, the date bought, the date sold, everything. Also, the 1099-B should provide information to the taxpayer about any corporate actions that may have affected them. Again, we don't think it's necessary for the broker to make adjustments because they sometimes may adjust incorrectly, but they need to provide the information that the taxpayer needs. And we feel that all of this should be in an IRS regulated, standardized format. So when you get a 1099-B from one broker, it looks the same format as a 1099-B from another broker. And for that matter, we're in 2013, everybody's using computers now, so we feel that the 1099-B should be accessible electronically for modern taxpayers and be something that can be used easily with software programs and e-filing solutions. Now, think about what this would mean when we talk about the different players here. For brokers aren't going to be tax accountants. They're not making subjective adjustments. They would simply be reporting facts that can be verified easily when the client looks at their statement. And we feel like this wouldn't take a broker 5 years to implement because every broker should be able to report this information pretty much immediately. Believe me, they're able to keep track of the commissions they make on each trade, so they can also keep track of the facts, what you paid, what you got, all of that. The burden of reporting, of course, would still be on gains and losses and wash sale adjustments. The burden of reporting the gains and losses, wash sale, that's all going to be on the taxpayer. But now the taxpayer is going to have the information they need. So they still have to generate all their taxes, but they can actually use their 1099-B to fill out the forms. Now, they can do this manually. They can hire a professional, a CPA, a tax advisor, whatever, or they can use a software solution. But again, we're giving the tools that the taxpayer needs in order to do this right. But what about for the IRS? Well, with what we recommend, the IRS would still have something that they could use to verify. They could use unadjusted totals for cost basis and for sale proceeds. They can compare that with what the taxpayer reports prior to adjustments. They can use that to make sure that the taxpayer is reporting all their trades. As far as what they want to do with wash sales, there's various extents that the IRS could use. In fact, in theory, if the IRS wanted to, they could go to the point of programming their computers to calculate what should be expected for gains and losses with wash sale adjustments. Because again, the IRS would now have standardized and actual verifiable information.
Right. Is it really that simple?
Well, we think it's easy. Of course, nothing's absolutely simple, but there's obviously details that would have to be worked out. Especially, we think the IRS would need to finally clarify some things that have always been vague. There's questions about wash sales and some of the other adjustments that are required that the IRS has never answered. They need to answer that so that we have some standards. And there is still the task for traders of doing their taxes. It's never going to be the simplest thing because trader taxes are very complicated. Wash sale adjustments can be very involved. But one of the things that we know is that there's a lot of benefits that come from software. When it comes to taxpayer burden, that can be greatly reduced with the use of software programs, e-filing solutions. And the IRS acknowledges this. They've acknowledged that electronic options reduce burden and improve the accuracy of returns. So if you provide a standardized trade history reporting, it's possible for tax software programs to use that to generate tax reporting. TradeLog has been doing it for over a decade. Mind you, though, we haven't had a standardized trade history. We've had to deal with different standards for trade history reporting from every single broker. So, but nonetheless, we're able to do it. We've shown that you can take trade history and generate accurate reporting. Of course, with all of this, though, the only way it's going to happen is if these changes are made. The right people take notice, and it's going to take action.
Well, Jason, you've helped us to see how the 1099-B problem affects us. What should our audience do next?
Well, of course, if you haven't checked out the special report that we published, we encourage you to do so. You can go to the link we provide. We have a link up right now. We'll be sending a direct link with our follow-up emails, so you'll get an email from us that has a direct link, or you can just go to our website, tradelogsoftware.com, and we've got lots of links to download the report. It's 25 pages long. There's a lot of detail. We have some explanations and examples that you can see. We've really just hit the highlights today. The report provides more specifics. On our website, we also have this resource page for the 1099-B problem. On there, you can see links to more information. I'll actually pull that up right now. It's tradelogsoftware.com 1099B-problem. Go there. We've got the links to the actual report. We've also got links for upcoming events, more information. You can check out articles that we've published, other articles published by tax experts. We encourage you to check it out and learn more about this problem. And as we have opportunities in the future to get involved, we have a section here as well. You can sign up now. If you're not on our email list, sign up, and you can also follow us on social media. That way you can keep up to date. Because we hope to create opportunities where people can provide feedback, get involved, and see how changes are needed and help get those changes made.
And of course, for active traders who need a solution right now to file taxes accurately, as Jason mentioned earlier, TradeLog software uses actual trade history to generate Form 8949 and other tax reports needed by active traders. TradeLog's reporting follows the rules for traders and includes reconciliation tools to try to reconcile with 1099-B when possible. TradeLog has been a trusted source for trader tax reporting by many thousands of traders for over 13 years. And you can learn more online at www.tradelogsoftware.com. Jason, thank you so much for the insight you shared with us today.
Well, thank you, Melina. It was good to be here, good to talk about this problem. I know there's been some people that have put some questions and some comments in, so I'm going to stick around and I'll send some responses to those via chat. But hopefully we'll be able to talk more about this in the future too.
Good, good. And to our audience, we thank you for listening today as well. And as we mentioned at the beginning, and also as Jason said, we recorded the session and we'll send a link to all registered for the event within 24 hours so that you can watch it again. And if you've submitted questions that we have not answered yet, you're welcome to stay logged in, and we may be able to answer some via chat. When you exit, please take a moment to answer our brief survey to tell us what you think. Thank you again for joining us, and have a great evening.